So the trade desk reported quarterly financial results that sent the stock price crashing, and now a lot of investors are curious what's going on with the trade desk stock. I'll try and answer some of those questions here in this video by elaborating on the company's latest developments. I'll also update for you my recommendation for trade desk stock, let you know if I think it's a buy or sell, and I'll share with you my proprietary discounted cash flow calculation for trade desk, what I think a fair value is for this business.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the trade desk reported that its revenue grew about 19% compared with the same quarter last year, and they continue to outpace the digital advertising market, meaning they're gaining market share. CTV or connected TV continues to be their fastest growing channel with no signs of slowing down. And that's good news for investors because more and more consumers are switching to streaming content instead of getting their content through satellite or cable connections. And so the fact that the trade desk is in a good position to capitalize from that is a big tailwind, boosting the opportunity for trade desk stock investors. The company saying that they are signing more multi-year joint business plans than ever before with leading agencies and brands. In fact, the number is at an all-time high, and we continue to see spend under these plans significantly outpace the rest of their business. Many of these plans are signed directly with brands. They're working hand in hand with their agencies also in almost every case to bring these partnerships to life. It's not an either or type of situation. So one of the bigger developments recently is the company launching the Kokai platform, or Kokai, their most significant upgrade to date, and one that represents a new frontier in digital advertising trading. It gives advertisers unprecedented power to drive precision and relevance in everything they do, all powered by the industry's most advanced AI technology. So this allows advertisers to generate better returns on their ad spending and be able to measure those returns more effectively. And this gives advertisers more reason to spend more money with the trade desk. So it's a boost for advertisers. And if advertisers see a better return on their investment, they're going to spend more. They're going to allocate more dollars to the trade desk. Right now, the trade desk's main competition are publishers of inventory that also sell that inventory. So think Facebook, Meta platforms, Google, right, with YouTube. They own that inventory, the advertising inventory, and they also sell that inventory. And so if marketers are spending money with Meta platforms and with Alphabet, that's less money going to the trade desk and their digital purchasing platform, their programmatic purchasing platform. I like that the management team provided some data points into how effective this new platform is. In the aggregate, they are seeing more than a 20-point improvement across key KPIs, key performance indicators, for campaigns running in this new system. The clients who have transitioned the majority of their spend onto Kokai are seeing increasing overall spend on the trade desk by more than 20% than those who have not. So I like this. They're seeing a 20% improvement on the return on ad spend. So rather than saying, let's keep our spending the same, they're saying, let's increase our spending because we're getting a better return on ad spend. So previously, if they said, look, we want to spend $1,000 with the trade desk every month, now that they're getting a better return on that investment, they're saying, all right, let's up our spending. Let's increase that to $1,200. And that's a positive virtuous cycle there that is not like infinite. They can't continue on that positive virtuous cycle infinitely, but there is room for improvement as they make these kinds of innovations that improve measurability, precision, targeting, etc., improving the return on ad spending, and then that will increase the budgets of their customers to spend more with the trade desk. Now, this document you see me reading from is the trade desk most recent earnings call transcript. I've made this highlighted document available for my channel members, you could go to your membership benefits section on my YouTube channel page, and you can see the link to the file with this document, as well as dozens of others from other companies. I go through these earnings call transcripts regularly, and I upload them regularly as well. They went on to say that advertisers are getting meaningfully better returns on their ad dollars. Around 3/4 of all their client spend is now running through this upgrade, this new platform, and they expect all of their clients to be using this new platform by the end of this year. So interestingly, Jamie Power at the Walt Disney Company has told the trade desk several times over the past couple of years that they intend to shift 75% of their ad revenue to biddable programmatic by 2027, meaning they're going to make more of their inventory available for the purchasers of the trade desk platform or clients of the trade desk that purchase advertising inventory through the trade desk. And that's going to be more inventory, more high quality inventory, and more reason for ad agencies and marketers to go through the trade desk to purchase this inventory. Also, recently, Disney announced that they will be launching the ESPN platform for sports. So all of that high quality live sports that previously was unavailable will now become available through streaming. And that's going to create a new way for marketers to purchase the highest quality. Right now, sports advertising or advertising in sporting events is the highest quality advertising, the highest price advertising. And so that will create a nice surge, or could create a nice surge in demand for buyers on the trade desk. So as I mentioned, I would share with you my proprietary discounted cash flow model for the trade desk. And I updated this calculation most recently. And I calculated the intrinsic value per share to be worth $70. It's down from my previous calculation of $73. I'm digesting more information from the trade desk most recent earnings release and the earnings releases of other companies and updating this information. And so that created the downgrade here in the intrinsic value per share from 73 to 70, but it's still undervalued when you compare to the current market price of $53.77. And so today I also updated my buy recommendation for trade desk stock on August 13th. I think this dip is a buying opportunity for long-term investors. The near term will have some headwinds. The company will be impacted by something we didn't discuss very much in this video, which is the decision by Amazon to make more of its inventory, to sell more of its inventory, and its partnership with Roku, which could have competitive disadvantages for the trade desk. But the overall tailwinds benefiting the company, I think, will outweigh those negative impacts from Amazon.
Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.